It's no secret that DeFi has been smoking hot this year. That's meant that almost every DeFi project has seen mad gains. That's good news if you jumped into DeFi early. However, at current valuation levels, you can't be blamed for thinking twice when deciding to allocate funds to the sector. However, here's the big question. What is the next hot sector in crypto? We all know that to maximize those gains, you need to identify that hot niche early, learn everything you can about it, and then find the best opportunities. But don't worry, I have you covered. My name is Guy, and in this video, I'll tell you everything you need to know about non-fungible tokens and why I believe this sector might just be the next big thing in crypto. I'm also going to explain how NFTs are already expanding the DeFi ecosystem and why they could be the key to bring tens or even hundreds of millions of people into crypto. Before I get going, there are a few quick things I need to say. Don't let the t-shirt fool you. I am no financial advisor. Sorry, chaps and chapettes. That means that this video is for educational purposes only. Be sure to consult a real financial advisor before making any hasty moves. Also, if you've come across my channel for the first time, then welcome to the Bureau. I'm constantly working in the trenches to put out top-tip crypto content that covers everything you need to know. So, if that sounds interesting to you, then don't forget to smash that subscribe button and switch on those notifications. That way, you'll be the first to know whenever I release another video. Alrighty, let's get cracking. Now, to get things started, I'm just going to give you a bit of an overview of what non-fungible tokens are. If you're already fully clued up, feel free to skip around with the timestamps that I've provided below. Non-fungible tokens, or NFTs for short, are essentially digital collectibles. These cryptographic tokens represent something unique and have these four properties. They cannot be replicated. They cannot be counterfeited. You can't print them on demand. And they have the same ownership right and permanence guarantees as Bitcoin. However, the collectible can be personalized and unique. So, NFTs are very different from something fungible that's perfectly interchangeable. An example of this is a US dollar. Now, I don't know about you, but a crisp $1 bill is the same to me as any other $1 bill. That means they are perfectly interchangeable and are therefore fungible. However, non-fungible is basically something that's not easy to mix with other assets or goods and have an emotional attachment to, like a collectible. A great example of this is antiques. So, if you're the type of person who loves the Orient and is insanely wealthy, then you could go to Sotheby's and get yourself 2 Ming porcelain bowls for a cool 56 million Hong Kong dollars. For those not familiar with the Hong Kong dollar, that's about 7 million US dollars. The key thing here is that these special bowls are not interchangeable with any other bowl. This makes it a non-fungible real-world asset. I mean, would you really want to swap those Ming porcelain bowls for something from IKEA? Well, unless you're a bit of a cretin, then the answer would be a clear no. The bowls are not equal. One is a mass-produced bowl and the other is a priceless Chinese artifact with hundreds of years of history and masterful craftsmanship. So, these bowls can be said to be non-fungible. The most well-known example of an NFT is probably a CryptoKitty. Each CryptoKitty looks different, has different attributes and colours. It's very much like those antique items. Another thing to know is that Ethereum is home to the majority of non-fungible tokens in existence today. There are two main types. Firstly, you have ERC-721 tokens, which are non-fungible tokens. Here, tokens are not the same. For example, a CryptoKitty which has a different design and attribute to others. Then you have ERC-1155 tokens. This Ethereum token standard isn't talked about much. However, it's an improved version of ERC-721 and ERC-20. It combines the benefits of both fungible and non-fungible tokens together. What's meant by that? Let's take a computer game like Fortnite, where you can get mythic weapons that are pretty unique and non-fungible. Then you have V-Bucks, which is fungible in-game currency. The ERC-1155 standard basically allows for the issuance of both fungible and non-fungible tokens. Pretty damn useful for computer games. Now you know the ins and outs of NFTs, I want to move on to the meat and potatoes of this video. That would be why I believe NFTs could be the next big sector in crypto. Alrighty, so the NFT market is projected to increase by 50% in 2020 and hit around $315 million in value. Yep, that's pretty solid. However, it certainly is not shooting out the lights when you consider that DeFi has rocketed from around $665 million in locked value at the start of this year to $4.2 billion today. That's more than a 6 times increase. So, why do I think that NFTs could be the next hot crypto sector? Well, the truth is that DeFi has absorbed billions of dollars in value this year by simply providing a few functions. That would be giving crypto holders the opportunity to leverage their assets via over-collateralized loans, supplying crypto to earn interest, and decentralized trading and derivatives. That's been enough to essentially push the entire DeFi market to over $4 billion in locked value. It's also been enough to see some truly crazy returns from DeFi projects. I mean, Aave has done it 20 times this year, while Kava has done a more modest 9.5 times. In case you didn't know, Kava is all about providing cross-chain lending services, and their platform has actually just launched with just BNB as collateral. I've recently done a video on that, so be sure to check that out right here. Whatever way you slice and dice the numbers, there's no denying that DeFi has been growing at an astonishing rate, and that DeFi projects have been on a tear when it comes to valuation. However, there is a point when people like you and me start thinking, what is next? Or are mainstream DeFi plays overvalued and it's time to search out for alternative DeFi plays? That segues me into my first reason why I think NFTs could be the next big sector in crypto. Yes, the DeFi space has seen tremendous progress in 2020. However, right now DeFi is kind of contained within the current crypto ecosystem. After all, we are essentially taking out over-collateralized loans to get stablecoins to either leverage our position in crypto by buying more cryptocurrency with that loan on an exchange, or we're using those stablecoins to convert to fiat and buying that Lambo we've always wanted. What that means is that almost all these DeFi loans are secured against cryptocurrency. However, the question we should be asking ourselves is, how can you take the current DeFi ecosystem to the next level? In my book, the natural progression is being able to lend against real-world assets and earn interest. That would bring real-world assets into DeFi, so to speak, and open up the ecosystem to non-crypto businesses looking to tap into this new source of capital. That's a completely new audience that we can onboard into DeFi, which can be leveraged to fuel even more growth. It just so happens that there's a platform doing just that, and they are using NFTs to make it happen. That mystery platform would be TinLake. These guys have actually got their platform up and running, and it's honestly gone under the radar of many in the crypto space. So, what is TinLake all about? Well, it's a securitization dApp on Ethereum, which allows investors and borrowers to finance their own asset pools. All that is done via open source smart contracts, which easily integrate into the current DeFi ecosystem. In a nutshell, companies seeking finances or cash flow in the real world can offer up assets as collateral. TinLake then tokenizes these assets and brings them on-chain as non-fungible tokens. On the other side of the market, investors can lend against the tokenized collateral assets and redeem their crypto, plus an attractive yield for doing so. Seriously, people, this is the evolution of DeFi in my book, and it's happening right now. So, what is really going on under the hood? Well, TinLake is built upon the Centrifuge protocol. This allows for on-chain borrowing against these real-world collateralized assets. It's all completely managed by smart contracts. All that enables asset originators or borrowers to access the liquidity in the DeFi ecosystem. The borrower basically puts up assets like invoices, mortgages, auto loans, or royalties, and these are tokenized by issuing NFTs. Investors like you and me bumble onto TinLake, and we can lend against the NFT tokenized real-world asset by supplying stablecoins and earn high-yield income in return. One cool thing about this is that it actually opens up the door for stablecoin providers to use these types of NFTs, backed by real-world assets, to back their stablecoins with collateralized asset pools and create real savings rates for stablecoin holders. That's a pretty interesting offshoot of all this. Another thing to know about Tinlake is that it will become a full decentralized financing protocol that is interoperable with different blockchains and can plug into a variety of funding sources and stablecoins. In a way, it's a little like Carver taken to the next level. After that brief overview of Tinlake, I now want to get into the nitty-gritty. At a zoomed-in level, Tinlake's set of smart contracts basically pool NFTs that represent those non-fungible real-world assets, and then use them as collateral to raise financing in the form of a stablecoin like DAI. This is done by issuing fungible, interest-bearing tokens that represent a claim on a fraction of the proceeds of the entire pool. Those fungible tokens can then be locked into crypto protocols or transferred to investors to draw funding. Oh yes, another thing to note is that asset pools on Tinlake are ring-fenced and can be configured individually with different interest and collateralization rates. Investors' risk and yield is shared for each individual pool invested in and not across all pools on Tinlake. When liquidity is pumped into an asset pool on Tinlake, its risk and yield tokens DROP and TIN are minted accordingly. When funding is paid out, these tokens are burned. So, what are these DROP and TIN tokens? Well, TIN is the risk token that takes the risk of defaults first. However, holders receive a higher interest rate as compensation for this risk. DROP tokens are the yield token that is protected against defaults by the TIN token. It receives stable returns, but they are usually lower. Now, I need to be honest and let you know that last time I checked, all the pools were full at Tinlake. However, you can check out examples like Console Freight, which is using the platform to tokenize their invoices and bring those cash flows forward to today. With all that being said, it must be noted that Tinlake is still at a very early stage. There are only 3 ongoing pools right now. Similarly, the total outstanding volume is only 1.1 million DAI, and the volume repaid sit at just 530,000 DAI. However, I really do think that Tinlake illustrates how DeFi can be further extended by using real-world assets as collateral in the DeFi space. Indeed, that potential market is numerous times bigger than the whole market cap of every single cryptocurrency combined. It also goes to show how NFTs could play a key role in onboarding more people into DeFi, and how that explosive growth could be further fueled. Now, before I move on from DeFi, I should mention the likes of Rocket NFT, which are offering loans of up to $5,000 in stablecoins against NFT collateral. That means if you own a plot of land in Decentraland, you can use that to get a loan. It makes a lot of sense if you ask me. And talking about Decentraland, that brings me on to the second reason why I think NFTs could be the crypto sector to watch. The truth is that the main use case of NFTs right now is as collectibles within blockchain-based games. Indeed, 7 of the top 10 NFT projects are games. Currently, So Rare is the most popular blockchain game using NFTs. These guys have put global fantasy football cards on the blockchain. Now, I don't know about you, but I used to collect football stickers when I was a kid. Honestly, you could complete the collection or trade them, and that was about it. However, I personally loved that. Kids these days don't know how lucky they have things. So Rare cards can be traded, can be used to play five-a-side football in a fantasy matchup, and ranks of your cards are based on the performance of your players in real matches. Then you have the Sandbox, which is a virtual world. Definitely check that out if you want to start your digital real estate empire and hoard those land NFTs. Third is Decentraland, which is a very similar concept to the Sandbox. Next, we have a game called Axie Infinity, which is a kind of hybrid between Digimon and Tamagotchis. Basically, you battle, collect, and raise digital pets that you own via NFTs. Now, I'm going to skip CryptoKitties, as I imagine most of you have heard of that. Another popular game is CryptoVoxels, which is yet another virtual world. And then finally, to round off the last game in the top 10, we have League of Kingdoms. I'm not going to lie, it looks bloody awesome to me. The reason why is that I spent my childhood playing a little game called Settlers, and this game seems to be just an advanced version of that while combining it with blockchain. What's not to love? When it comes to those NFTs, you can buy in-game land. You can even monetize that land as more kingdoms flourish on it and raise your property level. That translates into higher land value for you. So, if you're like me and have always wanted to be a landlord in the real world, then this is a pretty damn cool alternative. Oh yes, You can form alliances in-game and vote for leaders using blockchain, and even get limited edition skins so that other players know just how baller you are. Yes, I know many of these games look raw. However, here's the deal. There are around 2.5 billion gamers out there in the world. That's a heck of a lot of people. What NFTs allow you to do is to actually own items in games and give you the power to trade them with other people. Even better, many years down the line, blockchain-based games would enable players to still access those items earned in-game. This means you don't have to ask the permission of the owner of a walled garden to access those items. Something else that's pretty sweet is that this opens the door for people to build applications and communities around these items and directly interface with them using APIs and the blockchain. So, you can build whole systems outside of games like marketplaces, or apps which show all the details of an item for any game on the blockchain. For game developers, NFTs open up new ways to fund game development, monetize, market, design games, and potentially unlock new in-game mechanics. So, if blockchain gaming becomes even marginally successful, then there's the possibility of onboarding tens or even hundreds of millions of people into crypto through the use of NFTs. All we need to achieve this is one blockchain game to go mainstream. That brings me on to the third reason why I think NFTs could be the next big thing in crypto. Honestly, I was shocked to discover that art on the blockchain has kind of taken off in 2020. Basically, what platforms like SuperRare and Makerspace allow you to do is to collect, create, and sell rare digital art from artists all around the world. That artwork is represented by an NFT. This allows artists to release limited edition artwork tracked on the blockchain, making it rare and collectible. This is a kind of cool way for artists to monetize and for those art aficionados to get some cool and unique art piece without running the risk of catching COVID in some stuffy art gallery. My final reason why I think NFTs could be the next hottest thing actually ties in with one of my favorite blockchain assets right now. That would be blockchain domains. Right now, there are two main things you can do with these domains. Firstly, the domain name can be used as a payment gateway. That means you can attach all your cryptocurrency addresses to a single domain. This replaces complicated crypto addresses that you cannot easily convey to people with human, readable names. So, instead of trying to tell my mate to send ETH to a random string of letters and numbers, I can just tell them to send it to guy.eth or coinbureau.crypto. Much easier, right? The second use case is that you can use that domain to build censorship-resistant websites. What that means is that no one, apart from the domain owner, can take a website down. Imagine how useful that is if you're a journalist living under an authoritarian regime. Basically, you can store these blockchain domains in your crypto wallet, and that's done by using NFTs. So, with all those use cases put to the side, people like me are actively buying up blockchain domains to use for their business or to sell them on for a profit later. There's actually a very good track record for this. Let me briefly take you back to the early 1990s, where a lot of top domains could be bought for a handful of dollars. So, what are some of these domains worth today? Well, let's just say if you had managed to get your hands on carinsurance.com, held and sold years later, you would have bagged yourself about $50 million. $10 million plus domains are actually more common than you think, as many sales are private. Take crypto.com, for example, which reportedly sold for over $10 million. Blockchain domain extensions like .eth already have proven value too, with exchange.eth selling for around 6,600 ETH. Now, last time I checked, ETH was valued at around $390. So that means that this domain was sold for about $2.5 million at today's Ethereum prices. Personally, I think that the .crypto domain extension is the most versatile out there, and I frankly do own quite a lot of hot domains with this extension. If you're interested in flipping these blockchain domains and learning some of my methods to find solid domain names, then be sure to check out the video right here. If you want to just get involved in this NFT subsector straight away, then you'll want to create an unstoppable domains account to get access to those hot .crypto domains. You can find a link for that in the description below. Okay team, this video is getting kinda long, so it's probably time to share my closing thoughts on NFTs. Honestly, I'm shocked no one is really talking about the potential of non-fungible tokens right now and the value they can bring to the wider crypto ecosystem. I'm particularly excited about how NFTs have the potential to further fuel the growth of DeFi. I think it makes a ton of sense to bring real-world assets into that ecosystem. What's incredible is that the tech to do that has already been built and that platforms like Tinlake are already up and running. I have a feeling that this is the natural evolution of DeFi and can see how it could bring many new people and businesses into the crypto ecosystem. Gaming is yet another area that has the potential to onboard a huge number of people into crypto exceptionally quickly. It's a massive market, with players already having a firm grasp of digital currencies. The truth is that all we need is one blockchain game to be popular in the mainstream, and that could be enough to open the floodgates to millions of new crypto users. Now, I'm going to level with you, I'm not the biggest fan of art on the blockchain. However, what's already been validated this year is that some people are willing to spend big money on limited edition artwork. So I'll certainly be keeping close tabs on how this NFT sub-niche evolves. And finally, blockchain domains have already proven value and are increasingly growing in popularity as a payment gateway. Yes, quite a few people are speculating on these domains with the intention of flipping them. However, if our experience with .com and more exotic domain extensions is anything to go by, then that's probably a fair bet. Yes, DeFi is the topic on everyone's lips right now. However, I'm sure you are like me and want to keep ahead of the curve. And in my humble opinion, the NFT sector is certainly one that all crypto fans should have on their radar. And that's it for today, folks. I've been jibber-jabbering for long enough, and so now it's time to hear what you lot have to say. What do you think about NFTs? Any other crypto niches I should have my eye on? Use those comments below. Seeing that you've made it to the end of the video, I trust you found it somewhat useful. So please don't forget to smash the like button on this video and subscribe if you want to see more crypto content from me real soon. Okay, folks, I have something to admit. I didn't cover everything that I wanted to in that video. It really sucks. But this is exactly why I've started a weekly newsletter. It's basically a compilation of all the interesting content that may have flown under your radar. News, reviews, analysis, and hot market tips. Want to join? It's actually pretty damn easy. Head on over to the description. Down there is a link to my sign-up form. All you need to do is enter your email, hit submit, and bada bing, bada boom, you are a member. My next email is going out pretty soon, and it's one you won't want to miss.